Welcome, ladies and gentlemen, to Commodity TV and a new edition of our virtual online interview series. And this is like an interviewed presentation because some really big things are going on with Bluestone Resources. You remember the emerging gold producer in Guatemala. And with me here today is live from Guatemala, Jack Lundin, the CEO of the company. Jack, hi to Guatemala. How are you doing?
Hi, Jochen. It's great to see you again. I'm doing well here in sunny Guatemala City, so cannot complain.
Super. Yeah, you're doing that extremely right because the weather is much better and much hotter, but also your company is becoming really hot. And you have for us, it looks like that we are the first guys seeing this presentation here. That is fantastic. Complete material change in Bluestone Resources, Bluestone 2.0, you named it. And I would say let's dive into it. And the floor is yours. And please give us some insight here and we want to talk about it.
Absolutely. And thank you, Jochen. And you're right. I mean, we are presenting this to you first. We appreciate the engagement that we've had over the past year. I think you were one of the first people that I met when I had just taken over the company as CEO at PDAC 1 year ago. The world has obviously changed quite significantly since then. And as well, the project Cerro Blanco for us at Bluestone Resources has changed. And I'm very excited to be able to have the opportunity to present what we've been working on over the past several months. And with that, I will ask that you ask any questions at any time because we are presenting a totally new project, a new approach, and I'll explain exactly why we're doing it and why we believe we can do it in the following slides.
Mm-hmm. Fantastic.
So as always, Jochen, I am making forward-looking statements, and therefore it's important to just show this slide before I get into any of the details. But I will keep moving along, and really what we're dubbing this project, which is a good underground project, but a great open pit project. And so we're going from good to great, and that's why we've called it Cerro Blanco 2.0. In this slide, just before we get into any of the details, we have done a preliminary economic assessment on an open pit development scenario, and you can see the economics that are shown here from that change. So we're essentially doubling the resource, more than doubling the production. And when you look at that from a net present value standpoint, we're tripling the value of this project. So, in a snapshot, we've looked at this, we've looked at the details, we've engaged with our stakeholders, and we really believe that this is a project based on the geology and based on the understanding that we have, that we needed to change our development plan. And therefore, now we're coming out to the market and updating everyone that this is the right way and the right path forward.
Mm-hmm. Jack, question. When I see the double of the resources, even it's more than a double, to 3 million ounces, is this also a result of your, let's say, drillings of in 2020, but also 2021 already? Because we saw bonanza grades of 1,380 grams gold and I think 2,194 grams of silver. But on the other hand, we saw something like 103 meters with 2.4 grams, which is of course also outstanding, but they are closer to surface then, and so that means to me like with the drilling you had, is this the result that you have this much higher or this many more ounces now in the ground?
Of course, I would say that that's the main contributing factor. We had an extensive drilling campaign, around 15 kilometers of drilling that we achieved last year. And all of those results provided very good high-grade near-surface intercepts, as you will see in the previous press releases. And it was a contributing factor for us to be able to look at this and go, why hasn't this been approached as an open pit? It's an upward flaring vein array, the natural formation of this deposit, and it's near surface. And when you look at it, I mean, it's essentially an upside down cone, and therefore it already is the shape of an open pit. And the analysts that came to site, they have asked that question before. And so we really had the time last year to ask ourselves internally, why has this not been contemplated as an open pit? And the more research that we did, is really, it's because of the understanding of the geology that's changed over time. And of course, being in Guatemala, the question will always be about permitting and the appetite for a project like this in this part of the country. And we have a much better understanding, and we have much stronger engagement as well with the local and national stakeholders. And that's why we believe that we can really maximize the potential and the benefits of this project.
Mm-hmm.
So I'll take you through the next several slides here, but essentially, I mean, when we first looked at this, we did a high-level desktop study to see, is it worth going forward? I mean, we've got a very good, very solid underground development project and a blueprint to that. With our team was engaged, our vendors had been engaged in the plan to kind of go full steam ahead on an underground was really set. But at the same time, we said, okay, right before we go fully into that, what does that mean if we were to go underground? And what it means is essentially you're sterilizing over 1 million ounces of gold. Those would be left in the ground, not able to be mined. And really, you look at the mining law here in Guatemala and other countries, and our job as international mining professionals is to maximize the value of this project and the benefits that it can bring. And therefore, we're doing just that, and we believe that we can do that. So, historically, as I go to the next slide, why the change now? I mean, it was previously looked at as an underground. There was already underground development, and that underground development will actually provide us with opportunities as we are developing the open pit concept. It can be used as a dewatering level for us, and there's many benefits to having the infrastructure in place that we already do, even for an open pit concept, and we can get into those details.
So would that mean now that you do both, like open pit and underground?
We did look at that, Jochen, and really what it comes down to is once you start getting the pit deeper to where the underground workings would be, it is quite a hazardous situation that you'd be dealing with, and you would be coming in on open cavities underground through a surface operation, and therefore for many technical reasons and also the sizing of the pits and the sizing of the mills and the sizing of the infrastructure, it's the cost trade-off. It doesn't make sense to do that. So we have to look at it as one or the other.
Mm-hmm. Okay.
So this slide, we don't need to spend too much time on it, but really we have a lot more confidence, a lot stronger understanding, as to the climate here in the country. I have been spending most of my time down here since the borders opened in October, and we've been working with the national and local stakeholders to really understand what the climate is for mining projects in this part of the world. And yes, no doubt, there has been some issues in the past. There are issues that persist today, but we understand those, and we know as the Lundin Group how to work through those as a partner in this country, and we're confident that we can do that.
Mm-hmm. So would that mean also that you have to change now, let's say, permits? Because I could imagine this is really different to an underground when you do an open pit scenario. And would that, let's say, prolong the process until you can start with production?
Yes, that is exactly right. I mean, we're essentially looking at this as an entirely new project. The project before was permitted in 2007 with an underground development solution. Mm-hmm. Now, because we are going with a larger scale project, larger footprint, that means that we do need to go out and pursue a new environmental impact assessment, and we understand that process. But we are basically starting fresh and going after another EIA for Cerro Blanco.
Okay. And time-wise?
Yeah. So we've worked through the timelines. We're going to be presenting a preliminary economic assessment, which will then go directly into a feasibility study. That feasibility study will be used as our blueprint for development, and we anticipate that by the end of this year, Q4 2021, we'll be able to release a feasibility study. With those details that go into the feasibility study, they will serve also for the details that go into our EIA. So we'll be planning to submit our EIA application by the end of this year. And we're leaving around a 6 to 10 month period for reviews, observations, engagement with the Ministry of Environment and Ministry of Mining. And we anticipate that we can get ourselves into the construction phase next year in Q4 2022. And we're working on a condensed construction timeline as we were with the underground, and believe that now we can get ourselves into production in the end of 2024, as compared to the underground where we were anticipating production end of 2022. So while this is 2 years delayed of first gold, we're tripling the value, more than doubling the amount of gold that we can extract, and therefore we believe that this is the right approach.
Super.
So if I continue on here, I mean, as I mentioned, this is an upward flaring vein array. You can see this cross section looking north, the picture here, where we have a preliminary kind of snapshot of what the deposit looks like. We've got a lot of near surface attractive intervals. And to be honest, I mean, when we look at some of these intercepts, around 2 kilometers of over 2 grams a ton, I mean, and the fact that mineralization does essentially go to surface, this is really what caused us to pause and think, okay, good underground project, but what is an open pit concept? And it actually is a great operation. I mean, the economics, the production profile, it really does make for an attractive project. And technically it eliminates a lot of the challenges. As you know, Jochen, it is a hot springs environment, which means that the underground, the temperatures and the working conditions are very challenging. But when you're doing an open pit, yes, we still have to mitigate the hot water, but it's a lower skill requirement. And therefore, for us, which is very important, we'll be able to employ more of the local community to operate this project.
Super. So how deep would be the open pit at the maximum then?
Yes, so the open pit goes around 200 to 250 meters deep. So we are able to achieve and get to the lower extremities, the high grade zone of this deposit, similar to the depth that we were contemplating in our underground concept. Okay. So when we're talking, Jochen, I mean, the important thing here is for you to understand why we're doing this, and it comes down to the economic results, right? The PEA that we have undertaken, and we did it with our partners G Mining to look at this, and now it's going directly into a feasibility study. But when you look at these numbers, 4 billion over the life of mine in revenue. It's about 11-year mine life as compared to the 8-year mine life in the underground concept. Free cash flow generation is much more attractive, even at a conservative gold price. And I know that was something that we've talked about in the past, but 2 billion life of mine free cash flow, 907, so over $900 million at a 1550 gold price is what we're using, Jochen. So obviously a higher gold price, better gold environment. But
then also silver is $20 only, so that's super conservative, really.
Yeah, I mean, we're wanting to be realistic and have room for opportunity. I think we're going to see this project grow in size and grow in robustness as we do more detailed studies on this new concept. And peak production, if you see there, Jochen, at the bottom right side of the screen, is 330,000 ounces of gold. And that's in our second year of production. So, our maximum went from around 150 to over 300,000. So, more than double our peak production.
So question, what is the mine life then?
The mine life is 10.6 years. So about 11-year mine life. And that again is a conservative approach when we look at the indicated resource that we will likely be able to add in with the drilling that we're currently doing for the feasibility study.
Fantastic. And also, if we think about, I mean, today is gold a good $200 higher. We all expect even higher gold prices within the next years for sure. So I would think quite likely that we have maybe an average price which is $200 easily higher. So there's a lot of room for positive economic surprises, I would call it, because $100 with this production, this is $33.4 million more income net, right, per year.
Yeah, that's right. And to be honest, I mean, we've talked about kind of what gold price to use for this PEA, and some of our peers are using 1,600 and more. But you know, we're not trying to be overly promotional. I think the fact is, when you look at this project with conservative or realistic or whatever type of metrics you want, this does give us the confidence to move forward. And that's why I'm here, and that's why I'm spending most of my time, about 95% of my time now, in country to continue to push this project forward.
Yeah. Okay. Super. One last question here on that slide. The initial capex is now $550 million versus 225 million. It was for the underground. So this is like 140% more. Still makeable, of course, I would say, because given the fact who are your shareholders and who is behind your company. So from that side, I could imagine, this is absolutely makeable, right?
Absolutely. Of course, the capex has increased, but the project in scale has also increased by a bigger magnitude. And so therefore, it becomes much more on the radar of the Lundin Group. And this does become a project that we will be spending a lot more time on, a lot more focus, bringing in the people that we have over the last year and continue to ramp up with our resources and push this forward. I mean, we're not focused on doing studies here. We're focused on getting this project into the development phase and into operations. And before we can do that, of course, there's some stage gates that we have to get through: the permitting, the feasibility study, the continuous engagement with our stakeholders, and then the ordering of equipment, and really the ramping up and getting into construction. But we've set those key milestone targets, and now we're taking shorter term approaches on looking at what is needed over the next 3 months, 6 months, and step by step we're making very good progress down here, and we continue to have the confidence that we need to have in order to go after a project of this scale. As you mentioned, CapEx is bigger, so therefore we need to make sure we've got the right team and the right focus here.
Super.
So here's the production profile. I mean, you can see that it is a longer mine life and a more robust production profile as compared to the feasibility study or the advanced feasibility study that we did for the underground. Average life of mine production goes from 110,000 ounces to 230,000 ounces. Average annual free cash flow, you can see there in the center of the screen, still very robust all-in sustaining costs. And we believe as we do more detailed studies that we can even get that down further. But those really the attractive part here, Jochen, is the years 2 to 4, where we're having an extremely low all-in sustaining cost and a very high production profile, above 300,000 ounces of gold being produced in those initial years.
Oh, that's outstanding. And I mean, also those 266 million, that's US dollar, right? Per year annual free cash flow. I mean, this is much more than your market cap today.
That is right. Yeah. I mean, right now we are currently, I'm looking at my investor relations VP. Our market cap is, I think, around 280 Canadian.
Exactly.
So yes, I mean,
that's a slight 30% difference.
That's right. So yeah. I think that once people understand what we've been doing here and the work that we've done and the path that we have to get ourselves into production, we will be looked at as a completely different company. And that is exactly why we're very excited to be here to keep driving this project forward.
Super. And I think you also have, of course, more exploration upside while you are working in the open pit, because you are not stopping the drilling. So that means probably not 10 or let's say 11 years of production. It could be easily then 15 or 20 years, right?
That is correct. I mean, right now we've got a lot of attractive targets to the north of the Cerro Blanco deposit to follow up on, and we will be doing just that. And there is a significant upside potential here to increase the ounces profile, increase the life of this project. And, you know, as you stated, I mean, that's something that we will be following up on once we've got ourselves into the development phase.
Super.
So short term, what are our next steps? We're going to be finalizing the application for this new EIA. We're leveraging off of the historical data collected. We've got monitoring for environmental and social baseline information that has, of course, been very useful for us as we've been planning, and that's going to be very useful for us going into our permitting phase. So we will be working now for that permitting phase, as well as continuing to advance our study and getting this project into a feasibility study level. As I mentioned, that will then be used for the blueprint for development. And in parallel to that, I have no doubt that we'll be able to get ourselves project financing to advance. I've spoken with some shareholders, not particularly on the open pit, but basically on the commitment from the family, from the group to really put a major focus on Cerro Blanco over the next few years. And we believe that we can get ourselves into this early works or early construction phase by the end of next year. And once that happens, everybody will understand that this is no longer a project that's been studied for decades, but it's now a project that's ready to go into operations. And we're the right team to do that. And I have no doubt in my mind that we're going to be able to realize that potential.
Absolutely. Question concerning finance. Because you did last year a $92 million private placement, and I saw in one of your press releases also that you have a $30 million credit facility with Natixis, who will be part probably also then in the future financing. So the question for me is, as a shareholder, as I am a shareholder of your company, this year and next year, you still need money, let's say, to do the feasibility, to do the permitting, and also to get into the project finance. Do you have enough money to do that?
Yes, we've currently got about 45 million US in the bank, and that's going to get us through this year very comfortably. And we're going to be making sure that we do a very strict rollout of capital discipline for our team, so that we can preserve as much as possible to get ourselves to the point where we're ready to kick off construction. And with 45 million in the bank, that does get us very far into 2022, and hopefully into the point where we would then start putting long lead orders on equipment like the mining fleet and the mills for the processing facility. So, of course, as the largest shareholder of this company, Jochen, we are going to do everything we can to minimize dilution for our shareholders and focus on maximizing the money that we have in the bank today.
Yeah, and what I also could imagine, as I know, for example, and this has nothing now with advertising to do, but for example, I know Caterpillar finance quite well in Zurich, yeah, and I mean, with an open pit, probably there's also a good chance to bring those guys to the table, which would take a lot of money off the table in dilution, right?
Yes, so we are, we're assessing all potential opportunities to create the best financing package for this project, and so essentially we're looking at all options, and we are open to discussions with various types of financing solutions.
Fantastic. Question also, as we know, you have this Meta geothermal plant in addition, and of course we thought always in the underground that you can maybe work with a with an ore train electrified and stuff like that. Could you use then also for the open pit, let's say that you work, I know this from the Canadian magnetic mine, they have, for example, big excavators which are plugged into the grid, funny enough. So could you do something like this also, that you say, hey, maybe we can use this geothermal plant with our own power generation, which costs us like nothing, maybe, as you have it already, that might help you also to bring down further costs in the production?
Yes, of course. So our Mita geothermal project, which is just adjacent to the license of where our operation is, it's very close. It is something that we do always consider as an opportunity to produce renewable energy to supply not only to the mine, but also to the national grid, and at a cheaper production cost. I mean, there's some attractive margins in our preliminary studies that we have done. So there is an opportunity there, Jochen, for us to offset some of the power that we would require from the main grid. And this is something that we will continue to look at. Likely would be something that we bring in a partner for, as we're focused on getting the Cerro Blanco project off the ground and into the next phase. But it is attractive, and this is something that we speak about frequently with the authorities here in Guatemala. They are trying to offset some of the power that's going into the grid currently with renewable energy. So it is something that we take very seriously, and we will continue to monitor going forward.
Yeah, I think not only to monitor, because it could be also a monetization event for you in the future, right? I mean, everything helps to collect some money.
No, and we don't want to leave any opportunities here. As you can see, obviously we're doing that now with this project and looking at it in through a completely different lens. And so, of course, the geothermal project is part of that, maximizing the opportunities here in southern Guatemala.
Super, fantastic. Yeah, so from my side so far, no questions. I'm going here back now with you. Fantastic, Jack. Thank you very much. Wow. Yeah, it's really like I think I need a red wine afterwards.
Well, if we were together, I think a red wine and maybe even a cigar would be in order. But
yeah, definitely. That's also a good opportunity. Yeah, because here it's already 4:30 in the afternoon, so that's great. Okay. No, fantastic. Thank you very much. This is a real material change, of course, but I think valuation wise, it looks to me like also much on the high profile side. How can I say that? Because I'm really overwhelmed. I think this is an outstanding change from underground to open pit. And also I like the fact that you calculated this at 1550 gold. I mean, this is outstanding.
Yes, no, we're very excited, Jochen, and again, I appreciate you taking the time to talk with us. And you are the first that we've opened up this story to, and we're excited about next week and kind of advancing with this new larger scale project.
Fantastic, Jack. Thank you very much. I wish you all the best down to Guatemala, and I would say, ready to rumble.
Yeah, let's get after it, Jochen. Thank you very much.
Super, thank you. Yeah, ladies and gentlemen, that was a exclusive presentation from Jack Lundin, the CEO of Bluestone Resources, directly from Guatemala. And you heard it. This is Bluestone Resources 2.0 on steroids, I would say already, because they are changing from underground to open pit, and with outstanding economic data, outstanding numbers here. Also, the costs are slightly lower than with the underground. That's also really remarkable. And I think with an around 11-year mine life, $645 of AISC, or let's say about 650, maybe bring them down again a bit. This is great, but don't forget they have still $45 million in the bank. So they are also safe until it comes to the project finance. And this is really important for dilution reasons. And we know that the Lundin family is fully behind it. They are the largest shareholder of Bluestone Resources, and to be honest, $550 million is absolutely makeable and financeable in those markets, especially with such partners behind. And I would suggest you really check out this fantastic company, because it will be a real cash cow, and probably after the payback, a great dividend payer for the future. So thanks for watching us. I wish you all the best. Stay healthy. That's the most important thing, and see you soon. Thanks, and bye-bye from Switzerland.